Arvind Sanger is now joining us to talk a lot of other things as well as the macros coming from US. Arvind, good morning. Thank you so much for your time. Arvind, we've been looking at the very strong momentum US markets have been showing in the last few weeks, going into a lot of commentary coming from Mr. Bernanke, the PCE data, and now the jobs data. Is the Wall Street looking at that data or not?
Absolutely. I think right now the data is showing that the economy may be headed for a soft landing. But, there's always the risks around that. So the market is looking at, the employment number is going to come out right now. It's Thursday night here. It'll come out Friday morning. We'll be looking at that. The expectation is that, 4% unemployment rate, which was last month, last data point will remain relatively, constant, may go up half of 1%. But, if we see a sharp rise in unemployment, then you could get the fears that maybe the economy is slowing down too much. But if we get continued easing in the labor market, then what, Chairman Powell said at this central bankers meeting in Europe a couple of days ago would hold true, that the Fed is headed towards easing, and the consensus seems to be thinking that it might happen by September, because if the data both on the employment side looks less strong, and the other inflation data keeps confirming that inflation is headed to the mid 2% or lower, then that gives Fed freedom to start on an easing cycle.
Arvind, I guess the other factor to look out for is the presidential race. Up until last evening, there was a lot of chatter that perhaps Joe Biden is going to opt out. Now he says he's going to continue. And the markets are looking at rather simplistically that a Trump victory would mean more legs to the bull market.
I think both have pluses and minuses. Let's be clear. Trump is talking about keeping corporate taxes low or lowering them. That is good for the market. But he's also talking about tariffs, which are not necessarily good for the market. President Biden wants to raise corporate taxes, but he's also talking about maybe a little bit more concern about the deficit. President Trump doesn't seem to be as concerned. So, there's mixed pluses and minuses. The market is just taking the view that, I think the market would like a not too strong mandate for either side. Meaning you don't want a big sweep, Democratic or Republican. A big Democratic sweep looks very unlikely, but a big Republican sweep is possible. But I think a little bit like maybe I'm doing a bad analogy, but maybe like the Indian election, as long as Trump doesn't have too much of a majority to do too many of the more extreme things and is more focused on the economic stuff to do sensible stuff, then I think the market would be fine with it. But that's where I think the current consensus seems to be.
Very interesting analogy you draw, Arvind. A softer version or a slightly weaker win by Trump can be actually good for America. Arvind, I want to talk to you about how US, I'll say the FIIs to emerging markets are changing their stance now. China saw a lot of good funds. In the month of June, India was a recipient of FII flows. Do you think we'll build upon this after a gap of two years almost? FII will come back as some of the strategies back here are making a case, or it's uncertain still?
I think, look, India is overweight, quite a bit overweight in emerging market investors. I don't think the overweight is going to end. Now, month to month, does China come into flavor because Chinese market is trading at more than one standard deviation below its historical average? Yes, it can get some. There's a major meeting of the Party Congress middle of July. Will there be anything that comes out of the Chinese Politburo and the Congress which causes any optimism to flower? So if you talk about major emerging markets, China can always, get its moment in the sun. But the reality is that if you're taking any, reasonable time period view, there's no doubt that India is in a strong position. And I think, part of the challenge for investors was getting confidence on where the Fed is going. As that confidence is gaining momentum that the Fed is on an easing path, then emerging markets flow should continue, and India should be a beneficiary.
A quick word then, Arvind, on what's happening in the UK. Conservatives set to be ousted after 14 years.
Well, there's no surprise here. So, markets buy the rumor, they don't buy the news. And the data was very clear that Labour was headed for a landslide victory. If anything, it's a little bit less strong than what some of the polls indicated, but it's still very, very strong. So, now we'll wait to see what Labour does. But I think the lesson for the broader markets is, if you look at what's going on in France, incumbents are in trouble. And I think in France, there may be enough of an opposition kind of confluence that the National Front doesn't get an outright majority in the coming vote on Sunday. But, there's a lot of election stuff going on around the world. The Democrats are in trouble in the US because they're the incumbent. The Conservatives were in the trouble in UK because they were incumbents. And clearly, the incumbent Macron has suffered a lot in terms of performance of his party in the French election. So, I think in general, the trend is in that direction. But, one country is going left in the UK. France is going, we don't know how far right in the right wing, and US may be leaning more towards the Republicans, which is more right. So, it's a mixed picture. But I would argue that the political risk in global economies is growing because you have a lot of anti-free trade kind of ideas gaining momentum. And that's something to keep an eye on, that how does that impact medium to long-term global growth? Because anti-free trade is bad for everybody.
Such a pleasure having you today on the show, Arvind. Thank you so much for taking the time out.
Thank you.
If you like this video, then like, share and subscribe to ET Now.